If you're listening to this and you're like, man, my tax professional doesn't give me any of this information, I ask them about strategies to fit my lifestyle. I ask them, like, how can I reduce this tax liability? Ask yourself this: have I asked for tax strategies or have I asked for a tax plan? Because tax planning is a completely separate engagement from tax preparation and is not included with that. It's a separate engagement and is actually an investment into your future to make sure that you're keeping that liability down.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family, welcome to episode 42. Now, I gave you kind of a cliffhanger in last episode when I was talking about 3 ways to reduce your business tax liability. But we're going to pick it up here. And this episode isn't just for my business owners. So if you want to share it with a friend that doesn't have a business, feel free to do so. Today, I want to focus on this. Failing to plan is planning to fail. And that applies for the majority of my clients because I specialize in helping taxpayers that owe the IRS and can't pay in full, right? Usually it's 6 figures or more. So how do we plan when it comes to taxes? Well, it's called a tax plan. So episode 42, we're going to talk about what is tax planning. But before we get there, let's go back to that quote. Failing to plan is planning to fail. What does this look like in the tax world? All right. So you didn't like the tax bill you had last year for 2022, right? And right now it's November. You're just now looking for tax reduction strategies for 2023. That, my friend, is a day late and dollar short. For the 2023 tax year, you should have been looking at tax reduction strategies back at the end of 2022. Now, there are some things that you can still do to reduce your tax liability for this year, but to make the most impact on a year, you need to be looking at reduction strategies before the year starts. So that's one example of failing to plan is planning to fail. Another one is not finding an expert for your lane. Now, if you go to the doctor and let's say you were going because you're having chest pain, you don't want to see a podiatrist, right? Because they're going to specialize in feet and you're having chest pain. Now, could they possibly be connected? Sure. But that's not the first person you're going to go see. I want you to do the same due diligence when it comes to your tax situation. If you have a small business that is in the retail sector, you probably don't want to be working with a tax professional that is in the transportation industry, right? If you have real estate properties, you probably want to work with somebody who specializes in real estate. And that's just a recommendation from me. And here's why. The tax law, different credits and deductions, they apply differently for different tax industries. You want to work with somebody that's going to specialize in your area of tax law that you need and understand the different nuances to help you best. So, if you go work with the first Joe Schmo you find on Google, they may have excellent reviews, but none of their clients may have a situation that looks similar to yours. So you want to make sure you find an expert in your lane. Now, when we're looking at tax strategies, don't use the internet as your one-stop shop. What do I mean by that? You may have Googled what is tax planning, tax planning, tax reduction strategies, and found me. That is great. But if you never talk to me beyond this, don't take everything that I say as a blanket statement and is going to apply directly to you. You need to use this episode as a starting ground, then take your shovel and find somebody that's going to be the best fit for you. Okay? Because a tax strategy that works for Jane isn't necessarily going to work for Joe. That is why when I come across taxpayers and they tell me, well, I don't understand why I owe the IRS $20,000 and my coworker, Mary, she told me to fill my W-4 out like her. What they don't realize is, yes, they may be working the same place as Mary, but we have to take into consideration, is Mary making as much as you? Does Mary have multiple children? Well, if she has multiple children, guess what? She has more in tax credits than you. Her tax credits are going dollar for dollar against her liability. Is Mary married? Is she a mother? Oh, and you're filing as single. Guess what? Even if you are making the same amount, Mary is in a lower tax bracket than you. You see how when we apply life in these different situations, even if we take the same amount of money, it gets taxed differently. So one shoe is not going to fit every taxpayer. Same with a tax strategy. When we're looking at a tax plan, an efficient tax plan is going to involve tax strategies that are customized to fit your lifestyle and your goals to reduce your tax liability over time and not just today. Okay? Now, notice the emphasis on your. This isn't something that we can go halvesies on with a friend. Now, a spouse, sure, because you're most likely married filing jointly. But even your closest friend, your parent, your aunt, your uncle, the tax plan that they have may not work for you just because your life and lifestyles are different. Let's look at an example. Right now, so many people are pushing Roth IRAs. So many people. And I am not against them, okay? But people are pushing them as a tax savings tool, which it can be, but there are situations where a traditional is going to work better depending on what your plans are. And let me briefly explain. So, with a Roth IRA, you are going to contribute money that you are paying taxes on, okay? Those contributions are not going to reduce your tax liability in the year you contribute them. However, when you pull that money out, you're not going to pay tax on it. That's pretty sweet, right? Whereas if we have a traditional IRA, it's going to reduce your tax liability now, but you're going to pay taxes on it when you pull it out. Now think about this with me. Right now, while you are working, unless you're amazing at investments, right? And your parents started accounts for you before you were walking, right? If we think about right now while you are working, are you going to be making more money each year now while you're working than you'll be pulling out of a retirement account? I want you to honestly think about that because guess what? If you're making less money in the future, you would be in a lower tax bracket anyway. So why would you pay a higher amount right now while you have more income contributing into the Roth? Now, if you're in a situation where you got that nest egg, you got different trust funds, you're going to have all this income when you retire, then perfect, because you'll be at a higher rate. Now, I can make predictions of the future, but I can't tell you exactly what it's going to be like. People are retiring very soon. We're probably about to see the tax rates go up, right? Because we had a lot of free money going out. We got to recoup that somehow. But when we're looking at a Roth IRA versus a traditional, not only do you need a tax planner, but you need a financial advisor, and you have to be able to be vulnerable with them to share what you want your lifestyle to look like, what you want your goals to look like, because that's going to help you figure out if you need to be contributing to a Roth IRA versus a traditional IRA. All right. Two more quick examples. What about a health savings account? Let's say you are fairly healthy, right? You only have to go for your annual checkups. You are, man, you were healthy. So you have a high deductible healthcare plan. With a health savings account, you can contribute to that and use that money to pay for copays, over the counter medicine, prescription medicine, any kind of qualified medical expense. Well, I've had people ask me, why should I contribute to it? Is it a real savings? It is, but it depends on how long you can let your money just sit. Because check this out, until you reach a certain age, if you pull money out of that account and you don't spend it on a qualified medical expense, you're going to pay tax on that withdrawal and a 20% penalty. If you're the type of person that can't just let your money sit in an account, that's not a good savings tool for you. But if you are the type of person that can let it sit there, guess what? You can max out each year, and it's going to reduce your taxable income for the year that you make the contributions. Then the interest that is gained on that account, you're not going to pay tax on. And then if you pull it out for qualified medical expense or after you reach the qualified age, you're not going to pay tax on it. So you get a triple tax savings. Now, if I'm working with a client that I know is always pulling from their 401k and they're not good at saving, in their tax plan, I'm probably not going to suggest a health savings account, right? Because that does not fit their lifestyle. It'll help reduce their liability this year, but doesn't really fit their lifestyle. All right, same thing with hiring a child. Now, I am going to cover that probably sometime 2024. Don't have the time for it today. If you're interested in learning more about hiring your minor child in your business the correct way, make sure that you subscribe to my blog, Tax Tips with Timalyn. That is on the Bowens Tax Solutions website. And it does talk about how to properly hire your child. Okay? Now, if you're listening to this and you're like, man, my tax professional doesn't give me any of this information. I ask them about strategies to fit my lifestyle. I ask them, like, how can I reduce this tax liability? Ask yourself this: have I asked for tax strategies or have I asked for a tax plan? Because tax planning is a completely separate engagement from tax preparation and is not included with that. It's a separate engagement and is actually an investment into your future to make sure that you're keeping that liability down. You see, the thing with a lot of us tax professionals, and I don't know why this is, we'll have the knowledge and we'll assume that you just know that it's a different engagement. So when you kind of automatically assume that it's not, it's like we get flustered and we don't know how to tell you, well, that's a separate engagement. That's something else you have to pay for. So instead of just telling you that, we kind of give you crumbs. So before you throw your tax preparer under the bus, ask them, is tax planning something that you do that I can invest in so that we can lower my tax liability? If they say no, by all means, you are free to go shop after that. Maybe they know somebody. Maybe you need to check out my episode on how to hire a tax professional so you know what to look for. But just to keep in mind, to save money, you're going to have to spend money, whether that's contributing to some type of retirement account, investing in something else. But in order to gain the knowledge about how to do those things, you are going to have to invest in a tax professional that does tax planning. This is going to allow you to avoid a tax bill that you're not prepared for. All right. It allows you to control your tax bill and liability. But keep in mind, Your tax bill is what you owe after we look at everything that you've paid in already. Everybody is going to have a liability, but you can avoid having a bill. So I'm going to be covering this topic in a little more depth on my YouTube channel in the upcoming weeks. So make sure that you are subscribed on YouTube at America's Favorite EA. If you are listening to this on Spotify, YouTube, iTunes, make sure that not only you like this episode, share it, and subscribe, leave me a comment. Let me know what your favorite part of the episode was. Because check this out. Taxes don't have to become back taxes that ruin your life. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.